So, hello everyone. I just want to take another moment to give you an update on the market and on the mortgages and the industry and what's happening as we continue to move through this very unique and different time in all of our lives. Um, I want to share with you a couple of things. I want to talk about what is going on when regarding the retaining of your home. I know some are concerned and have questions, no doubt, about you know uh, how to continue paying those mortgage payments and how to work through some of the challenges that you may be facing. So we're going to talk about that, and then we're also going to talk about if you're in the market, if you're needing to or wanting to buy and sell at this time, what's happening on the mortgage front, what are some of the changes from lending practices and things as we move through this COVID-19 pandemic experience. So we are fortunate today. I've got Sean Poole with me. He is with Movement Mortgage, and Sean is here in the local Triangle area market here in North Carolina, but Movement Mortgage is a national company, so you can certainly find them anywhere where you may be, but you can work with Sean too, no matter where you are. But anyway, Sean's going to enlighten us on what's happening in the mortgage world. So welcome, Sean.
Welcome.
Great. So why don't we start with people trying to retain their homes, understanding the guidance that's coming, what's happening with forbearance, and all the other options that may be out there. Maybe you can help us understand that better.
Yeah, absolutely. So one of the big things that we're seeing, obviously around the news and everywhere, is the word forbearance. So your servicer, really the government is telling you that you could miss or delay your payments for anywhere from 6 months, potentially another 6 months, or potentially a year of forbearance payments there where you're delaying your payments. So the real key to that is if you have to be in that scenario where you're essentially skipping those payments for the short term, what happens after the fact when it comes to making those payments up. So those payments are certainly not forgiven. So forbearance is certainly not forgiven. So in the long run there, so if you happen to go into an agreement with your servicer, you need to make sure that you read those details, with a fine-tooth comb, because for the most part, all the servicers that I've actually researched myself, they're going to ask you. So if you skip, say, 3 months of payments, on that fourth month there, they're going to ask you to pay 4 payments, which, if you're unemployed for a certain period of time, you're just getting back into the workplace, you trying to make 4 payments of a mortgage that you may have be hard to come up with 1 payment for, then you're going to be in a position to where you're looking at other routes to make up for that, whether it's a loan modification or some other route to sort of get you out of that hole that you were in there. So one of the key things is, so with this, forbearance is set by the CARES Act that was released recently, and that the CARES Act has a couple of other provisions in there that can help. So obviously making your mortgage payment is key for doing whatever you can to keep your home there. So if you can continue to tap into your savings, potentially tap into your retirement savings. So if you have retirement savings there, the CARES Act does have a provision in there where you can go up to $100,000 into your retirement account there, potentially penalty free, but for the most part penalty free, as long as it's in relation to the COVID-19 CARES Act there. And you could look at for a 3-year period there, having to pay taxes back on that, but that gives you a normally you would have to go into their retirement account on a penalty basis, but in this scenario they actually waive penalties for it as part of the CARES Act there. So that's one way that you can help if your liquid savings and your bank accounts are not sufficient to keep making that mortgage payment there. Obviously, there are other routes you can look at if you don't have the retirement savings there. Let's say you have the ability to continue to qualify for a mortgage. You can potentially look at doing refinances, things like that as well to help during this time period to either take some equity out of your home. If you have someone in the house that's still earning money where you may not be. So there's a couple of different avenues to look at. So overall, the best thing to do is continue to make that mortgage payment if you can. But then if you're not able to, then certainly making sure you're reading all the details of what you're actually going into with forbearance there.
Okay, great tips and advice. So essentially, there are some other options if they can deploy them where they could be not, taxed on. So there are several things that are being allowed given this situation with people's retirement and stuff, is what you're saying. So you can use that as a vehicle if necessary, and maybe it's an option before looking down the path of forbearance. Sounds like that might be one of the, I'll say last steps, but kind of your last resort if necessary. And to remember that forbearance is not forgiveness. You will have to pay it. It's just at a later point in time. So as Sean said, read the fine print, make sure what you're talking with your servicer and know the details. So those are some options if you're in the situation of needing to figure out, how to retain the home you're in. Another possibility is if you need to maybe reduce and downsize your home, you could consider to list the property and purchase one of a lesser price and benefit from the equity in the home that you're selling as well. So I am seeing people take advantage of that as a strategy as well. So,
Cool.
All right. So cool. So let's talk about if you're in the market, you're looking to buy, you're looking to sell. What are some of the changes, because there have been some changes on the lending front that people need to be aware of?
Yeah, certainly. So, the main thing right now is there's tightening across the board for different lending guidelines. So, and that stems from, people going into forbearance and worrying about repayment for loans, and it really stems from the unemployment numbers that we have right now, because we've never seen these kind of unemployment numbers before. So, looking at that, there are some tightening of guidelines there. So, typically we could do a government-backed loan like an FHA loan, VA loan, USDA loan, down to a 580 credit score. Now we were going up to a 640 score as a minimum. Just recently, yesterday, we actually released we're going back down to 620 minimum credit score. So we have a little bit of relaxed of that, restricting of the guidelines there. So we're rolling some of those changes back out. So that certainly helps. But as far as people coming into the market as first-time home buyers, really making sure that your credit is in good shape, so that you have at least a 620 score. But also in this market right now, outside of a USDA program, which is the rural areas, so that, you're not buying like in town. So if you're in the triangle area, you're not buying like in Raleigh with the USDA program. You're buying sort of on the outskirts of town. So that program is available with 100% financing, as well as the VA loan if you're a veteran that has the ability to do VA loan. But outside of that, your bond loans, so North Carolina housing loans that offer the down payment assistance for you, those are suspended right now. And then, we also have an in-house 101% financing program that's also suspended right now. So for the most part, you're looking at coming into it, unless you're doing a USDA or a VA loan, and you're starting to buy a house, and you're looking at least 3 or 3.5% down payment. Whereas normally you could get some assistance for that if you qualify for it.
Yeah, so that's some big changes. The number in terms of the credit scores have tightened. So for you guys, you're saying movement mortgage is at 620. What about lending in general? Is there?
I mean, we're seeing other lenders, of course, that are going higher than that. We're seeing some at 680, some even at 700.
Wow. Okay.
Big lender out there that went to a 700 credit score. So there's some that tighten more than others. There's many reasons behind that, but there's certainly in the short term here, we're going to have some tightening of guidelines there for different borrowers.
Right. Okay. So that's something to keep in mind. The credit scores, like I said, 620 with some lenders like Movement Mortgage, up to as high as maybe 700 with some other lenders out there as far as the minimums. And then down payment now needing to come in with 3.5% down payment. There are less 100% financing options right now, and these are hopefully temporary conditions, but just wanted to keep you updated to what's current on the mortgage front. So you need to keep that in mind. Of course, now if you're listing your home, It is still a good time to get your home on the market. The benefits right now, if you're finding yourself in a must move scenario and need to put that home on the market, there are less homes in general out there. So the competition for a home is less. So the buyers that are out there, and there are still buyers, there are plenty. I'll speak to the market here in Triangle area. No doubt we've seen a slowdown just like everywhere in the country, but we are benefiting from still being in a place where many, many people are choosing to move to and be in. And our situation here is our supply is much less than the demand that exists. And that was even before COVID-19. And now it's even more of a situation with less homes coming on the market. So the demand is really strong. And just to give an example, just in this past week alone, we have closed here in the Triangle, which is our whole area, 785 homes closed in just the past week. And just in Wake County, which is one county of the Triangle, we have 3 or 4 counties making up the Triangle, we had 369 homes closed in Wake County, which is the county I reside in. And just to put that in perspective, last year at this same time, the same week and time period in 2019, we had 842 homes closed across the Triangle, and we had 445 homes closed in Wake County. So our numbers aren't too far off. They're what, maybe 50 to, I don't know, quick math, maybe 50 to 75 delta on that. So I just say that to say that we still have activity, things are still moving. And if you are in the need to put your home out there, it is a good time because the market is less inventory, therefore things are moving because those serious buyers still exist. So either way, I can help, Sean can help. I just want to educate you on what's happening. That was the purpose of this video. And I just hope that everyone is continuing to stay safe and stay well, and reach out if you've got any questions related to real estate, mortgages, and we'll do our best to get the most accurate answers for you. If we don't have them, we're certainly going to find them for you. Anything else to add, Sean?
No, that's pretty much it. I mean, a lot of people are hearing, housing crisis and things like that. But if you look at the numbers, obviously still having a shortage of homes out there, shortage of supply. We're certainly not looking at a situation where we were back in 2008, 2009, as the housing crisis there. So we were definitely, at least in this area, in a strong market, so we're not having the same concerns as we did back then. So it definitely is a good time to look at buying or selling. So.
All right, great. Well, thank you so much for your time.
Thank
Have
you.
a good rest of your day, and take care, everybody.
Okay, bye.